Here's your Santa Clarita 14-day market update, and we've got some interesting changes this time around. Let's start with inventory. New listings are about the same. We had 128 compared to 127 in our last update, but total inventory actually came down. We're now at 806 homes and condos for sale compared to 831 last time. So even though we're in a time of year when more sellers typically enter the market, buyers are still absorbing some of that inventory. And just to put that in perspective, back in August of 2008, during the last significant recession, we had 2,062 active listings. Today, we're at less than half of that. Now, on the sales side, things picked up. We had 118 new sales compared to 100 in our last update. That's a pretty good jump. Maybe buyers are getting serious before the end of summer. Now, here's something I always watch closely. 49% of recent sales closed at or above asking price, while 51% closed below asking. So prices are still generally stable, but sellers need to be realistic. We're seeing a lot of sellers lower their asking price before they get an offer. We're also seeing sellers get their asking price while agreeing to pay for an interest rate buy-down or provide other buyer incentives. And if the new construction builders are offering those kinds of terms, you probably should be too. Now, here's the number I find especially interesting. We have 3.15 months of housing supply, down from 3.81 months. That's a pretty significant move. Sales are picking up, inventory is down, and buyers are absorbing homes faster. So the market is tightening a little bit. The July median sales price was $785,000, down from $812,500 in June. And that's about $87,000 lower than July of last year. Now, 1 month's median price doesn't tell you everything that's happening in the market. You really have to look at the bigger picture. And then there's interest rates. They're still bouncing around. Oil prices have been unstable, which creates some inflation concerns. And inflation concerns can put pressure on mortgage rates. But there is some good news. The inflation numbers are looking better. So maybe we're going to see better rates ahead. Right now, FHA and VA loans are generally in the mid to high 5% range. And conventional loans under $806,500 are generally in the low to mid 6% range. That's still a pretty good environment for many first-time buyers and veterans. So, is now a good time to buy or sell? I think we're asking the wrong question. The better question is, are you living where you want to be living? Years go by fast. Don't waste them waiting for the perfect time. There may not be a perfect time, or it may not come until it's too late. If you're thinking about selling and staying in California, Proposition 19 can make taking your current lower property taxes with you to your next home easier than it used to be. And if you're considering buying, remember this: the strategic buyer doesn't necessarily wait for lower rates. If rates drop, more buyers are likely to jump back into the market. That means more competition and potentially more upward pressure on prices. You may be better off buying now and refinancing later if rates come down. And I'll keep saying it. Santa Clarita is a bargain. I know our prices can seem high, but compare us to surrounding communities in Los Angeles and Orange County, and we're almost a steal. Great schools, safer neighborhoods, local city government, and so many other advantages. I'm honestly surprised our prices aren't much higher, but the secret is getting out. If you're thinking about buying, selling, or just trying to figure out what these numbers mean for you, give us a call. 661-310-1013. Let's talk about your situation and figure out what makes sense for you.